sector.
It's protective, not because you're worried that the economy is slowing.
That is correct.
Is the economy slowing?
I don't think so. I don't think the underlying economy is slowing. In fact, even
what does that mean? The underlying,
the fundamental economy, consumption and business investment, C+I. That's the fundamental economy. Looks very good. I mean, even for example, in the fourth quarter, we got a small markdown. There are all kinds of glitches here with winter seasonals and government shutdowns. But I noticed business capital spending was very solid. Consumer spending was solid. Here's one point. I think a lot of people are surprised not only how low inflation is, but in fact that inflation has been coming down in the last year.
Prices have been coming down.
Yes, and you see it in the, the Fed's measure of the PCE deflator and so forth, total and core. And I think that's a surprise, and therefore the increases in rates. And by the way, I'm not here to jump at the Fed or criticize the Fed. This is just our view, my view.
I mean, there would be cynics out there, Larry, who would say, well, what they're doing is, if protectively, in case the economy does fall, they're setting up a blame the Fed scenario.
I'm worried about protecting the best economic growth in several decades. As President Trump rebuilds the economy, we don't want to endanger that. And we are, as everyone else in the world is, aware of some of these external threats from around the world. Everybody's coming to the USA. Direct investment, portfolio investment. We're the hottest game in town. We don't want to jeopardize that.
So let me ask you it in a different way then, Larry. If we do not get a 50 basis point cut at some time, do you believe that global economic weakness will in fact cause a slowdown here in the United States?
Well, I don't think that the rest of the world can overwhelm the U.S. In fact, usually my view is, continues to be, we are the driver. We are the engine, okay? If we're doing well, that's going to help the rest of the world, all right? But I will say, there's no question, when you look at Europe, particularly big trading partners, and Canada, and parts of Latin America, and Asia, and China, we are, wary of that. We're concerned about that. So I see this more as actions to protect the great economic re-emergence that we have. We haven't had job numbers, employment numbers, wage numbers. Here's another one. Coming out of the woodwork is what I'm calling it. You've got, if I get these numbers right, 7.3 million job openings, according to the BLS JOLTS numbers, and roughly 6.5 million people unemployed. Well, how do you match that? Well, people are now moving from unemployed, discouragement, back into the labor force. It's really quite remarkable, seldom seen. Most of the experts miss that. I don't want to jeopardize that. And they're coming back as wages are rising, which is important. And also, our administration, I want to give my colleague Ivanka Trump some credit here, we've emphasized reskilling and retraining workers, not by the government, but private businesses, because they need the help. I don't want tight money to interfere with that. That's what I'm saying.
You say the fundamental economy is not slowing right now, not what you see. A lot of others see it slowing a little bit, but I'm sure you know that. You've said in a sort of full-throated way, you see this as a 3% year.
I do.
You still?
Yes, I do.
You still do.
We won't get it in Q1. We don't get it in Q1 because we never get the seasonal adjustments right.
And we did have a government shutdown.
And I wish the Commerce Department would get the seasonal adjustments right. Otherwise, I might have to turn them all into condominiums. It's a beautiful building, as you know. But sure, every year for the past 7 or 8 years. But as we get into the spring quarter, I think, yes, we will resume 3% growth.